What is up everyone, Anton here with the second video of the Quant trading series. And today we're going to take a closer look at the price. How is the price of an asset being determined on an exchange? We are going to write a very simple algorithm, and then we are going to simulate trending markets. We're going to simulate uptrends, we're going to simulate downtrends, and to see how the books will behave, how the order books behave, and how our algorithm behaves, so we can actually build upon that, make it more complex, and so on. So basically, let's get started. Let's open up Maker. That's where we need to be. So let's delete these two lines. The first thing we're gonna do is make a little convenience function, so we can actually place orders a little bit more easier with less typing. So I'm gonna say market maker, place order. That should be fine. And we're going to say if it's a bid or an ask, which is a bool, and we're going to make it a price, which is a float 64, and we will return an error, of course. So let's copy this thing like this, place it in here, and then we are going to say this will be the bool we give it, and the price will be the price we give it, and we can return this error. So now we can actually place orders, which is in a more simpler way. So basically what we're gonna do first is, so we have this maker loop, which is our logic of our algorithm. And what we did previous episode is basically we checked if the best bid and the best ask is 0. If that's true, the order books are completely empty, and we are going to fetch the price from another exchange and then offset that price, right, to seed the market. So instead of, if we seeded the market, let's just continue, right? We don't need to do anything more. We can continue the loop like this. And what we're going to do then is basically make a simple, the most basic algorithm we can ever have is basically check the bid price, check the ask price, and undercut. Of course, these orders right now are our orders, so we are actually undercutting ourselves, but later on we are going to add another market maker into the scene, so they can actually compete with each other, right? So let's do this real quick. So we're going to say if R is the market maker, place order. What's going on? We're going to say place order. It's going to be, let's start with a bid, so it's going to be true. And the price is going to be the best bid price. Best bid price. And we're gonna add to that price because the bid price sits here, and if we want to undercut, we basically need to add a certain price, right? And let's say it's going to be 10. So we're going to add 10 to the current price. We're going to check if the error is, of course, not nil. We are going to say logres, I think error, and then just place the error in and break, because we are sitting in a go routine, so returning won't help us at all. The next thing we're going to do, let's copy this function, and we're going to place the ask. So instead of saying that it's a bid, we're going to say false, so it's going to be an ask, and we're going to say best ask price, but instead of adding, we're going to subtract, right? Because the asks are sitting here in the books and the bids are sitting here. So we need to subtract from the asks and add to the bids. So we are actually making the spread more tighter, right? So we're going to say minus 10, if that makes sense, right? So the next thing we're going to do is, let's open up order book real quick. Let's go to place market order, because we're going to print out the current price. And I will explain how that works. So this is place market order, I guess. Yes. So what we're going to say here is logres with fields, logres fields. And we're going to say that the current price, like this, current price is going to be the trades is basically the last trade is going to determine the price. And I will open up FTX to show you that. So it's going to be len OB trades -1 and that price, right? And then we say info here, so it actually returns something on the screen. So let me open up FTX. So this is the current price of Bitcoin, right? 19,140. How is this price actually being calculated? Well, it's very simple. The price of an asset is always the last filled market order. It does not matter if it's an ask or a bid, it's just the last order, the last filled order, market order. So we can see here market trades, right? And if we compare these two, these will always be together, right? You see, this is 141, 141. Let's wait for the next trade. It stays the same, stays the same. You see, 142, 142, 143. And let's wait for one tick. Come on. And 142. You see? So it's basically exactly that thing. The last trade. And that's what we do in our code as well. So we're going to fetch all the trades. And we take the last one. And we show the price. That's what's going to happen. Let's open up our main. Because right now we have something that simulates market orders, right? This thing, it's a market order placer, and that will simulate all our market order behavior. And what we're gonna do is, instead of placing a buy order and a sell order, we are just going to place one order. So we're gonna simulate trends. So we can do that by saying the random integer is going to be rand int n, and we say 10. So what this is going to do is it's going to generate a number from 0 to 10, right? And then we're going to say that a bit is true. So we're going to place a bit. But if the rand int is going to be bigger than 5, we are going to say the bit is false. Right? This will basically almost have an equal chance to a bid or an ask. So we will have some kind of equilibrium, like a stable market, right? Yes. Then we're going to say just an order. We're going to say the bid is the bool we just calculated there. We're going to say place the order. And then we're going to delete this order. So what is going to happen is it's going to be either a bid or an ask, and it will have a chance of 50% almost. And that will be 500. Let's make the tick a little bit faster. Instead of 1 second, we're going to say 500 times millisecond. A little bit faster ticking, right? A bit more action. Okay. I think that's good. Let's open up Maker real quick before we test this. So let me quickly scan this thing. Yeah. So the problem is that in this case, our Maker order, what's going to happen is it's going to keep place orders. And that's not the best approach, right? So we cannot keep placing orders forever, because otherwise the spread will be 0, and we will still keep placing orders, which will eventually switch ask with bids, and that's not good. We are actually losing money. So we need to, if you remember, in our at the top of our config, we have this min spread, and the min spread is basically a configuration variable that will determine what is our minimum spread, what is our minimum profit, right? So able to do this, what we're going to say is we're going to calculate the spread real quick. So we're going to say that the spread is going to be the best ask. It's like this, best ask price minus the best bid price, right? That will be the spread. And if the spread is going to be smaller or equal than the min spread we configured, we are going to just continue, right? Like this. And maybe we could do a logres with fields. log res fields. And then we're going to say, for example, that the current spread or the spread will be the spread we just calculated. And then we say info like this. All right. A couple of issues I think that could already arise. And that's basically if we open up our main. It's the seed offset. I think the seed offset is way too much. So we're going to offset this with 40. And then our min spread is also way too much. I think ideal for us is basically the order size times 2, right? Because we set 10 above the bid and 10 below the asks to tighten the spread. So it should be minimum the order size. It should be the min price. We don't have that configuration variable. Anyway, we are using 10 right here. Where is this thing? Here. We should make this a variable. This 10, right? That's what I mean. So our minimum spread should be 2 times this variable. And let's just test this, and then we can actually make this config variable. That would be much better. So let's see what's going on. Make run. So the spread is getting tighter. And we'll keep logging out the spread. That's not the best thing to do because it will basically clutter up the whole terminal. Let's do this. Let's just do not log it because we can calculate it. We can see it in the logging anyway. So make run. All right. So we can see the current price is 10.20. It's going to be 10.10, 9.90 even. It's going back up, back down. It should be actually even, right? It should be even. And it basically keeps hanging at the same levels, which is good. And at a certain point of time, the spread will be 10 and we don't place any orders anymore, which basically means that we're going to panic out because there is not enough volume on the market. And we're going to fix all these things piece by piece. So you see, it's a nice mixture between asks and bids. And that's pretty fine. Okay, cool. The next thing we're going to do is making this configurable. That would be a good thing to start. And then we are going to simulate uptrends and downtrends and see how price behaves, right? Best bid 10. That should be... Let's make this price offset. Price offset should be a float 64. In the config, let's make this here, but private also. And then we're going to say that the price offset is going to be the CFG price offset. Right, and then if we make, let's say price offset here, let's log that out. Price offset. And then in our main, we're going to say that the price offset is going to be 10. So we're going to take the price and we're going to offset it with 10. Below or above, depends on what we are trying to achieve. Yes. Then back to maker. Like this, here we have this hard-coded 10. We're going to change this with price offset. And then we're going to subtract here with price offset. And let's make run real quick to see if everything is all right. Yes, behaves the same way. Kind of a stable market. All right. The next thing we're going to do is we go to main, to our market order placer, simulator actually. So we're going to say bid is true. So we're going to place a bid. And if it's bigger than 5, we're going to place an ask, right? So now we're going to say if it's bigger than 7, we are going to place an ask. And this means that there will be more buying than selling, right? There will be more bids, there will be more buying pressure than selling pressure, which should result in a price going up, right? So let's see if that actually works. Make run. Let's see how this behaves. So the current price 120, we are dropping, but it's normal, it's random, right? So we should see it should go up in a bit. Because if you see, it still basically randomly places a lot of asks, right? But now you see more bits are coming through. We need to see this at the long run, right? So now more bits are coming in. So the price is already increasing to 1030, the current price. As sometimes you see it flicker below, and that's because we're placing an ask. So the price is already at 1040. And now basically we have no volume anymore. That's because we configured that if the spread is 10, if it's the minimum spread, we basically do not place any orders anymore, which basically means at a certain point of time, because we are the only market maker, volume will be non-existent, right? But that price is already going up, that's fine. So what we're gonna do is, instead of saying above 7, we could say above 3, or we could basically do this below 7, which basically means that there is a high likelihood that we are going to place sell orders, asks. So the price should go down in this case. So let's test this real quick. So we're at 1010, 990. More asks are coming in. We are at 1000, 990. $980. The spread is still 20. And now the spread is 10. Right? The spread is now 10. So now we're not going to place any orders anymore. But the price is decreasing. But at a certain point of time, the order books will be empty and we will panic out. But let's see how low the price will drop in this case. 960. And you see what's happening right now. And I'm going to stop, right? Because we see some shenanigans going on. And that's completely normal, right? You see at a certain point of time, the price is 960, which it dropped all the way from 1010 to 960, which is good because we have a lot of selling pressure going on. But the problem here is, at a certain point of time, you see that the price is 10. And it is a bug, but also not a bug. It's actually normal behavior, but we didn't check this condition. So what happened is, basically at a certain point of time, in this case, it's the bits, right? And at a certain point of time, the bits on the order book will be empty. And we query the order books to give us the best bid, but that will be 0. Because there are no bits. That will be 0. So what happened is, we take 0 and we add 10 to calculate our price, because we offset that with our price offset by 10. So instead of 0, it will be 10. And that's not a good behavior. What we should do in this case is, basically, we should check the current, if the price is 0, we need to check what the asks is, what the best ask is in that case. And then we could actually offset that with 20, if that makes sense, or something like that. Or we could also go to another exchange and see what the best bid is on that exchange and use that, for example, right? So there are a lot of things we can do in that case. And to be honest, in real life scenarios, we won't have to deal with this, because these exchanges will always be populated with enough liquidity. But because we are using our own exchange to demonstrate and to test things, it could be that there is literally nothing in the books, and then we have these issues and we need to fix these, right? So we can fix that real quick. I think we need to go back to Maker. And it's very good. You should say, yeah, but we should fix these issues beforehand. And that's not always the case, because this will give you weird behavior, and it will make you think much deeper into why these things happen. Because a lot of people take things for granted in these trading order books and in all this scene. But if you know these concepts from a very low level, it will make you a much better trader overall, right? It makes you a much better trader overall if you know these deep, how these things work at a very, very low level, deep under the hood. Or how do you say that? All right, so how can we fix this real quick? So we have, so if the best, that's good. We could say that if best bid price is 0, in this case, you could say something, should we override this variable? Why not? Best bid price should be, for example, best ask price minus the seed of set. No, not the seed of set, the price of set. Times 2 maybe? Yeah, that could work. And we could do the same thing with the best ask. We could say best ask price should be, wait, what's going on? Best bid, best ask, that should be the best bid price. And we should actually add the price of set times 2, right? So we don't run into these issues. And let's see if this actually, after a couple seconds, will solve our issue. So it's trying to clear these limits, right? And you can see that here, you see this, it cleared the limit 990. It cleared again, but we are sitting at the current price of 980. So now it cleared 980, so we should come soon to 970. We are at 970 right now, which is good. So you see that it's clearing all these price levels, right? All that liquidity sitting in these price levels. And we, with our algorithm, is just following the trend of the market. Right. And now, instead of this nasty issue, we get basically that there is not enough volume. And that's completely normal because, like we mentioned, how we programmed this right now is that if the minimum spread is 10, we won't do anything anymore, right? Because we don't want to undercut. We don't want to provide liquidity to this exchange because we don't want to undercut anymore because that's the minimum profit we configured for our algorithm, right? And that's, so if there is no liquidity anymore being placed because we are the only market maker, at a certain point of time, we will get this error because there is no volume anymore. And yeah, market orders cannot proceed, right? So although it's an error, it's normal behavior, right? So this was basically our algorithm, the most simple algorithm to show you how price works and how you should drive the spread, although we did it with our own orders. In the next episode, we are going to place another market maker into the game so they can actually compete with each other instead of competing with ourselves and see how that behaves. And so also today we have discussed how price work, how price is being determined on an exchange. And we created our own marketplacer simulation so we can actually simulate bull markets, so to say, and bear markets, right? Uptrends and downtrends, and to see how these levels in these order books are getting cleared, right? So that's it for this episode. The next episode, we are going to add competition into the game and continue improving our algorithm. If you like this video, if you found this useful, please consider subscribing, like, leave a comment, join our Discord, and I'll see you in the next video. Thanks for watching. Bye-bye.